one. This is Agriculture Today. We are joined now by K-State grain economist Dan O'Brien for this week's grain market update. So before we get into things, Dan, thanks for joining us today.
Thank you, Samantha.
Absolutely. So we've got a lot to catch up on in the past week. So let's go ahead and start with futures. What have those markets shown?
Well, it's been a week in which the futures markets took a move to the downside for the feed grains anyway, and also a little bit lower on the wheat. Closed on on Thursday at with the May contract, which is now the lead. You still have a March contract, but that's in the delivery period. But the May contract at 633 3/4 and D's at 570. Perhaps now by this time of year, there's still some grain being held, but we kind of have our attention on the new crop bids. 570 is down about 25 cents, 30 cents from where we had been for a good amount of time throughout the winter. So that affects, of course, both new crop corn and grain sorghum bids. When you look at soybeans, closed at 1367 on Thursday. And that happened to be up from the previous day's close. May, the lead contract now 1509. So still, we have pretty strong support for what's happening in the soybean market. And on the wheat market, Kansas City hard red winter wheat, generally down lower. Some of the moisture that we've got in parts of the West it has no doubt had some impact on the what the prospects for the crop are and what how traders are bidding. I'm really curious to see what our climatologist Jeff Whitworth and others say about what their take is on soil moisture, on weather prospects going forward. But as we're sitting right now, we have caught some moisture, at least in the northern part of western Kansas. I'm curious to see what's still out there in the southern parts and other areas around the state. But generally, we have had more moisture, and I would say in looking at some of the moisture maps over the last bit of time, that although the drought monitor does show that we're still quite dry in a lot of the areas we had been dry in for a while, when you look at accumulated moisture over the last 30 days or last 90 days, it does show that the northern plains have caught quite a bit. Of course, a lot of that's snow, and they had to dig it out, but it was still there, and it's so interesting to watch all of that. I think when you look at the last 90 days in terms of moisture, the percent of moisture relative to what we have had in the past, that the one place in the Corn Belt that still holds out on the worst side is actually kind of a streak from southwest Kansas up into the center part of the state. So our friends and neighbors in southwest part of the state are still suffering some of that. I would say that again, coming out of that Ag Outlook conference a week ago, a week prior, we did get some interesting news about how the transition from the La Nina weather pattern it had hung around for a bit, that's forecast now to occur moving forward to transition to a La Nina, would bring moisture to parts of the western Corn Belt, and we would probably in the areas that we were dry in, so terribly dry for the last 3 years, well, that'd bring moisture to those same areas, and actually some dryness to some key parts of the eastern Corn Belt. But if anything, it's kind of up in the air. It's that it is how in a transition year, which is kind of what the climatologists sort of view this, at least the ones we heard at the USDA conference, how in a transition year, how quickly do we see that? Do we see this change from dry in the western Corn Belt to wet in parts of the western Corn Belt? I guess we'll be watching for that. I would say also, we talked about cash bids, and as the futures have gone lower, we've certainly seen basis weaken in most of the areas. Still strong, of course, surprisingly strong still in southwest Kansas for corn. New crop, the best new crop bid that I could see anyway, in looking at elevator bids. And now there are ethanol plant bids and feedlot bids that may be more, but at least for elevator bids, about $1.21 over, and that's still heroically standing strong, I guess, across the state. The next closest bids, then part of that was in the Garden City area. Next closest bids would be actually Hutchinson 74 over. Columbus area has one or two bids that are pretty strong at 61 over. Followed by then Colby 54 over and Salina, Topeka a little bit weaker. New crop bids still in Garden City 55 over at 625 for the best bids, which compares to the next strongest bids of basically at even money at 570 in Salina. You're getting to the place where if someone were really looking to lock in new crop bids, but these differences are almost what we call truckable. You could put grain from one area to the next and truck it to somewhere. Now, without anything planted yet, I don't know that people are really looking to do that, but pretty stark differences between Southwest Kansas and the rest of the state. I would also say we've been paying attention to grain sorghum quite a bit with some extension meetings we've had of late. One in Hoisington, out in the central part of the state, just a day or so ago. And grain sorghum bids really holding up pretty decently. If anything, a little bit more uniformity across the state with grain sorghum bids than with corn. New crop bids, not too bad. Again, the best one, again, is Southwest Kansas at 561. And that's generally comfortably, if we get decent yields, that's covering cost of production. So soybean bids still holding up amazingly strong. Topeka has a bid of 4 cents over. So you wonder, are they filling trains or what are they doing over there at 1524? That'd be on Thursday. And new crop bids, the strongest ones against Salina, Topeka, and also Hutchinson. So kind of a triumvirate there of strong new crop bids. Wheat bids have suffered in the last week. We've seen a fair drop off in the futures, and basis hasn't changed that much that I could see anyway as we try to monitor these locations. So new crop bids now for wheat at more along the lines of 771, 782, 759 at the lowest. So we're at a place where we're still making money, but yeah, we're in February. And the seasonal price trends from February on now into March, April, and May are generally over the years historically have generally been stronger and higher. So it's kind of where we're at. I should say something else. Although it's sure a question as to what caused the drop off that we'd seen in the last week. Now, some of it may have to do with the rolling out, the beginning of the delivery period for that March contract relative to these other contracts. So you didn't see a lot of whipsawing between the March and May, but we have seen some forced movement out of the March contract as people liquidated their positions there. If they were forced to sell that what had been long positions, well, they'd sell March, they'd buy other contracts. So we've seen some movement apparently out of that March contract, and I guess I'll trust the market situation better once we get beyond this delivery period and see where we stand. The other factor, Samantha, that I'd bring up is that we have ongoing issues out in the in Argentina and Brazil. Now in Brazil, we have increased concerns that the moisture they've had down there, which was again basically viewed as, well, rain makes grain. Well, it sort of did for soybeans, I guess, but has delayed their harvest some, and has also delayed their planting of their second crop, or I think they call it the safrinha corn crop. And that then pushes that development of that crop in parts of that country out the back end of their optimal growing season, out into a drier time. So that could could affect us in terms of corn demand down the road, just about the time when we're planting corn. And the situation in Argentina hasn't changed any. In fact, we have reports coming out in the last 1 or 2 days that's very likely that the numbers the USDA had will continue to be ratcheted lower. So I stand back and look at all that, and an eventful week. New information, of course, out of the USDA. I look at those USDA figures now with the week of perspective, and generally, I don't doubt the acreage numbers at all that the USDA is putting out. They all seem to be pretty relevant. A negative hit on cotton for sure, but everything else even to a little bit higher. So yeah, that makes sense. The USDA's trend line yields for corn seem to be on the high side and end up presenting a lot more negative picture than I think we'll end up with if in the bigger scheme of things. And what it comes down to is they predicted a trend line yield of 181.5 bushels per acre for this growing season that is fully about 4.5 bushels higher than anything we've ever attained. So that makes you wonder about that, whether we'll be able to actually attain that, and if so, then their projection on prices at 560. And really, if we actually got 181, as I've looked at those numbers, we'd actually have, if we actually got what they're talking about, we'd probably be less than 560. So I'm not saying there's any politics involved, but really it's more of a moderate price relative to where it could go. It's more like, am I thinking 525 to 540 or something? So be that as it may, the sorghum number looks pretty good, but the sorghum number for prices is exactly the same as corn, and that would be a setback from where sorghum has been. We have been bidding a little bit higher than corn. For wheat, not a lot of changes there in wheat, but they in that balance sheet that they project in the coming year, they're anticipating a pretty strong exports. Let me pull up that just a second here to look at that and make sure I'm putting out the right number. Oh yeah, and by the way, they're anticipating large export rebound in grain sorghum also. So I hope we get that.
Yeah.
But for exports, increase of 50 million bushels. And one thing that's happened quickly this last week, we got news of the kind of a strong buying move in wheat, surprisingly positive in terms of the week of wheat purchases for the week ending on I think it was February the 23rd. And so at numbers that are actually downright bullish. So we got bullish export numbers at a time when the price has fallen off. Well, I guess I just attribute that to shrewd international buyers. They see prices falling off. Well, this is the time to go. So apparently they did. And would also add in on the soybean side that generally the USDA numbers don't seem terribly far out of whack. Really, not a lot of change. We would see an increase in yield up to 52 bushels per acre U.S. average. Maybe that's okay. That'd be better than last year. Not a lot of qualms with that. Acreage about unchanged. I think there's some expectations that with these high soybean prices, and actually the soybean corn ratio now favoring beans, that maybe that number's too low. I guess we'll see. But given all of that, they really show a price drop down to $12.90. And we 2 years ago we were at $13.30, $14.30 this year, and without a lot of change in the ending stocks to use. So now we're seeing what's projected to be about $1. Well, I have to get my calculator out and figure this out. I think it's about $1.40 decline. And so we're banking on in that forecast that the Brazilian soybean crop will be so huge that it'll overwhelm any losses from Argentina, and that we'll get a great crop, and that we're just going to double down and start to rebuild world stocks with this, and that may or may not happen. So I guess I've sort of monologued my way through that, Samantha, in terms of the overall picture. But so if you ask me what my thoughts are on where the markets are going, I think generally we've taken some information in. We're in maybe the biggest factor of all is we're in February. We don't have any field work yet, and we've caught a little bit of rain, and we're not paying a lot of attention to South America, some of the problems they have down there. But we were in February. We're down to March. And once we start getting into the field and having some actual production risks from the U.S. come into play, I don't know that we'll see any vast recoveries in the U.S. side unless the Brazilian numbers prove to be just that much lower than we thought. And we'll have to wait till the next March WASDE report, which is just around the corner.
Sure. Yeah, that growing season starting way earlier than it seemed like it was supposed to. It seems like it's just around the corner now. I feel like I've blinked and now it's March. So yeah, that warming up season is going to be here sooner than we think probably. And, lots to come because of that in terms of what we see in the market. So Thank you so much for recounting everything from the USDA outlook. I know that that was a huge meeting and a lot of information that was valuable to be shared. So thank you so much for joining us and sharing all of that with us today.
Thank you, Samantha. Appreciate it.
Absolutely. Once again, everyone, that was K-State grain economist Dan O'Brien joining us for this week's grain market update. We'll be back with more ahead on Agriculture Today.